Rarely do people actually think about taxes. But why is that? Do you think sometimes it makes sense to try lowering your biggest expense, that being taxes if you're an entrepreneur? Yep. As you're just about to get your 2021 taxes filed, it's not too early to start planning for even 2022's tax strategy. Hey there, my name is Kenner French. I'm with vastsolutionsgroup.com. We're going to be talking about 2022's top 5 essential tax tips. You know, it's important that you build your plan. You think about some strategies to reduce or defer your taxes now or in the future. We're going to go over 5 essential tax tips that are going to be worth sticking around for. Number 1, let's talk about tax harvesting. Usually, the strategy, it's implemented near the end of the calendar year, but truly it can be done at any time. With tax loss harvesting, you sell off your holdings that have a loss position to offset the gains that you've experienced from other sales. Think about it. The asset you sold is then replaced with a similar investment to maintain the portfolio's asset allocation, as it were, and expected risk and return levels. It won't restore your losses, but it can ease the pain. By the way, obviously try to get more gains than losses. Number 2, using long-term gains and the 0% tax rate. For those who fall within the 15% tax bracket, your long-term gains are tax-free under current IRS regs. Make it a habit to project your taxes and to look for tax opportunities every year as part of your plan. Even if higher rates, it can make sense to make some gains and take them off the table now. Number 3, making IRA contributions. A lot of people hear this but don't do it. You have until the upcoming April tax day, here's the April 18th, to make a Roth or traditional IRA contribution for the tax year, the preceding one. But why put it off? In fact, you could even use your income tax refund to fund it. Remember, a Roth creates tax-free income in the future, which is worth its weight in gold in the whole scheme of things. This is kind of becoming a bigger and bigger topic. Number 4, that being a backdoor Roth. Some people make too much money to contribute to a Roth IRA or to take a deduction on a traditional IRA. But you still can make a contribution to a traditional IRA without the deduction and later convert it to a Roth IRA. There's no tax due except on growth in the account that you earn between the time of the contribution and said conversion. If you hold money in a traditional IRA for even a short term, the growth and the resulting tax should be pretty small, so you should be in good shape. Number 5, exploring financial vehicles that can defer taxes on dividends, interest, and capital gains. Tax deferral allows you to employ the triple compounding effect. And what are they? It pays interest on the principal, interest on the interest, and interest on the taxes that you would have paid if you were in an investment that were taxed on an annual basis. This year, or for any year that matter, don't wait to the end of the year to start thinking about moves that could save you taxes. Start doing it now. Start planning now. You'll be so happy you did. Now, if you have any questions, we're here to help. vastsolutionsgroup.com. We're here to help lower your taxes. Check us out on the web, again, at www.vastsolutionsgroup.com. Give us a call at 888-808-8278. Any of us will be more than willing to help you. We love helping entrepreneurs lowering taxes. That's what we do. We've been doing it since 1969, either doing financial advisory work or tax work. Now we're doing some work on the blockchain to help people get on the blockchain. Please, feel free to contact us.